Thank you, Matt. Appreciate it. Thank you. Thank you very much for that very kind introduction, and good morning to everyone. It is great to be here this morning. Thank you to Brian Askins for the invitation to be here today and for supplying this beautiful venue. Very nice place. Happy to be here. And Matt, thank you for your logistical support. Without Matt, we don't have PowerPoint, sound, we don't have anything. So thank you all for that. And thank you all too for joining me today. I know you're busy, you're agents, you got a million things going on, you're going 120 miles an hour with your hair on fire, the life of an agent. You're carving out some time to be here today. I greatly appreciate that. So thank you for that. So I've got a couple things. Did everybody get a name tent? If you can just put your name on there, it helps me out as I walk around a little bit because I like to move, helps me identify who you are and makes conversation a little bit easier. If you didn't get one, I've got some more up here. Let me know. Got one. Where did I put the rest of them? Here we are. Yep, right here. Thank you. Matt hit a little bit on my background too, but I like to always have this slide in there because you're thinking, who is this guy? So I like to tell you just a little bit about my industry experience and what brings me here with you guys all this morning. So Paul Gannon, Vice President of Business Development with First Heartland. I came on board with First Heartland in September of last year, so I'm still kind of the new guy, although they do have someone who started after me, so I passed that title on to Joe Kinnison, so he's running with that. Over 30 years in the business. After 30, you stop counting, so we'll just say it's somewhere between 30 and 40 right now. I was an agent just like you guys. I sold a lot of life insurance over kitchen tables on Saturday mornings, it seemed like, and Saturday afternoons. I don't think I had a weekend off for several years there as an agent, so I get it. And as I structured this, I try and put my agent hat on and think about what's going to be valuable to you. I always sat in those chairs and wondered, is this going to be any value to me? That is my objective, is to bring value to you on this today. I did some work with the American College. I do hold a CLU and an RICP. I was also an instructor in the FSCP program. Brian, I don't know if you've got guys that work in FSCP or are looking for designations in the American College. That's a great one to start out with, particularly for property and casualty agents or Medicare sup agents. FSCP is a great designation, and I had a lot of fun doing it too. So a lot of work with the American College. I also hold an FLMI, and on the FINRA side, I hold Series 7, 24, 63, and 65. Anybody in here FINRA licensed? I don't know if we have got a few. Okay, cool. We can chat on that too. If anybody has questions on FINRA or stuff like that, we can go in that direction if need to. So I'm gonna run around the room very quickly. If you can just give me your name, how long you're in the business, and the definitive question is your favorite cartoon character as a kid. In full disclosure, I'll give you mine, and this was close because there were several favorite cartoon characters. I'm gonna go with Scooby-Doo. Was my favorite cartoon character, and as you divulge this is probably the most important information you can give me today. Favorite cartoon character as a kid, and we'll just run through this very quickly. Helps me get to know everybody. Does everybody know everybody else in the room? Some of you not met before too? Okay, that's helpful I think too as far as getting to know each other. So we will start right here. Just name, how long in the business, favorite cartoon character.
Joe Reek, Tasmanian Devil, 3 years.
All right, right on.
Shelby Williams, 4 years. Mickey Mouse.
Mickey Mouse, awesome, welcome.
Tony Gossard, 5 years.
Hulk, cool, right on, right on. Good morning.
Allison Jackson, 4 years, and probably Scooby-Doo.
Scooby-Doo, right on, that's 2 for Scooby.
Jason Brock, a year and a half. Tom and Jerry.
Tom and Jerry, welcome Jason. Morning.
Carl Piper, over 30. I liked all the elements. Everything from Bugs Bunny to Wile E. Coyote.
Right on, fantastic, great. Israel.
Israel Du Bois, about 4 years. Power Ranger, if that counts.
Power Rangers definitely counts, awesome. And longest drive came in from Georgia?
Yes.
Right on.
Probably Tyler.
Oh, and Tyler too, that's right.
My name's Holden Kiefer. I've been in for about a month now, and I'd say Double D from Ed, Ed, and Eddie.
Double D, right on, welcome. Tyler?
Tyler Tingu, about 10 years, and anything Marvel.
Marvel stuff, right on, cool. Awesome, Hunter.
Hunter Powell, been in for a little over 2 years, and then probably Sonic the Hedgehog.
Sonic the Hedgehog, right on, cool.
Scott Gaither, right at 6 years, and Fred Flintstone.
Fred Flintstone, right on. Steve?
Steve Knersch, about 12 years, and I'm going to go Speed Racer.
Speed Racer, right on. Cool.
Jason White, 11 years, and Roadrunner.
Roadrunner, right on. Camille?
My name is Camille Clark. I've been in for about 3 months, and I guess SpongeBob.
SpongeBob, all right. Thank you, Camille. Good morning, go ahead.
Zeb Zinn, 1.5 years, Bugs Bunny.
Bugs Bunny, right on. Cool.
Tim Smith, also 1.5 years, and probably Tom and Jerry.
Tom and Jerry, right on.
Anthony Schuler, 2 months, and I'm going to go Charlie Brown.
Charlie Brown, love it.
Larry Wilson, about 20 years, Bugs Bunny all the way.
Bugs Bunny, right on. That's 3 for Bugs so far. Colin?
Colin Gimlin, about 2 years, and definitely Scooby-Doo.
It's right on. That's 3 for Scooby. Not that I'm counting.
Michelle Hagler, 12 years, and I don't watch TV, never have, never will.
Never have, never will. All right, we'll default that to Scooby-Doo. Okay. Yeah.
David St. Ange, I'm going to my first year, and probably Tom from Tom and Jerry.
Right on. Thank you, David.
I Deb Webster, 4 years, and the Roadrunner.
Roadrunner, right on. Thank you. Sir?
Mike Steinmetz, 29 years, and Roadrunner.
Roadrunner, all right, great. Welcome.
I know.
Dallas Keithley, 20 years. I got to go G.I. Joe.
G.I. Joe, right on. All right.
Monty McCurley, I've been here about 15 years, and I'm going to say the Jetsons.
Jetsons, cool. Nice one. All right. Brian, you can jump into.
Brian Askins, 32 years, and Popeye.
Popeye, cool.
Noah Miller, just getting started, and Looney Tunes.
All right, welcome Noah.
Sid James, 1.5 years, and probably Iron Man.
Iron Man, cool.
Brian Thompson, 14 years, Captain Caveman.
Captain Caveman, I remember him. He had his own show, right? He had the Captain Caveman show. Did I miss anybody? All right, now that we all know each other better from our favorite cartoon characters, we'll go ahead and roll on a little bit. So thank you for indulging me on that. I'd like to have a little fun while I am working with you guys. So today's agenda, and I'll do my best to stick with this, we're gonna work from 9 to 10 on Module 1. We'll go Module 2 at 10 o'clock. Then we'll get a 10-minute break. If you need to get up, stretch your legs, get some water, move around a little bit, do so. We'll try and adhere to that 10 minutes. So if you need to get up and leave, try and make sure you're back in here in 10 minutes. We'll go from 11:10 to noon on Module 3. We will go right into lunch at 12 to 12:30, and I think Brian's got that set up right here behind the partition, so you don't have to go too far, and you can eat right here at your seats. 12:30 to 2, we'll go Module 4. We'll take a 10-minute break, and then we will roll into the afternoon. For the final Module 5, we'll do some case study work, and that's where we're going to kind of have a culmination of the other modules that we've put together coming together for that Module 5. So it is a progressive learning on there, and you'll apply some of that as we get rolling into that final module, and very interactive on that as well. Here are the ground rules, and there's just a couple of them, but I'd like you to adhere to them as best you can. So there's no bad questions, thoughts, or ideas. This is a safe place to talk about different things that we want to do in this business, maybe things that we want to try, things we want to learn. I'd rather have you do it in here and maybe it doesn't work out than with a client where you crash and burn. So in here, it's cool. There's no bad ideas, no mistake you can make. No question is not a good question. The more you participate, the more you'll get out of this. So if you were thinking, I'm going to sit in the back of the room or on the side here and not talk or be involved, you're in the wrong place. Because I definitely want you to be involved. Bring out those ideas, bring out those thoughts. Let's get a conversation going. This is not a lecture. Oh my God, you do not want that. And I don't want to be up here for 6 hours talking. So it's just a conversation. You're just sitting, I'm standing, but it's interactive. Try to make a list of something you liked or learned during the course of the day, and it can be anything, and jot it down. It doesn't have to be something I said or that was on a slide. It could be something you picked up from the person next to you, or an idea or a thought that somebody else came across. That's what we're looking for. It's going to be kind of a best practices at the end of the day. I'll ask for that in a little survey that we're going to do. So keep that in mind as you hear something cool, jot it down and share that, and we'll talk a little bit about it. Module 1, we're going to talk a little bit about basics of fact-finding and risk tolerance, effective questioning, open-ended versus closed-ended, and building a financial pyramid, which is a concept you may or may not be familiar with. If not, good. Then it'll be something new for you. If you have, then we can refine it a little bit today. as we talk about fact finding, and I've got some good examples here today, I'll ask a question. How many of you use a fact finder in your initial interview with the client? Just a quick show of hands. Okay, about half the room, okay. Somebody who raised their hand, why is that important?
Gather the information that you need.
Gather the information you need, you bet.
Get to know the people.
Get to know the people, yeah. What other thoughts on fact finding?
Professional.
More professional? Okay, good, like it.
Repeatable process.
Repeatable process? Like that a lot, yes. I don't have to reinvent the wheel every time I sit down with a new person. There was another thought here?
Well, it's how you're gonna give them the product that's the right fit for them.
Right fit, finding the right solution, absolutely.
It prevents you from missing important information.
You bet. You don't want to miss a sale or potentially the right solution for that particular client at that particular moment, wherever they are. Yes, sir?
It also teaches you to listen.
It does. It will sharpen your listening skills, right? And you got to be paying attention to what they're telling you. If you ask the right questions, they'll tell you everything you need to know and then some. Absolutely.
I think it makes them feel like they're more important to you because you're writing down what they're saying.
You bet. Builds trust, builds rapport. I'm listening to you, you're listening to me. We're building rapport, we're building that relationship, and that is so vital in the business that we're in. So great points on why it's important. I agree with everything that was just said. Are you more or less likely to miss a sale when using a fact finder? If I'm not using it, am I more likely or less likely to miss a sale? You bet. Yeah, absolutely. Absolutely. That will help. And as Brian said too, it helps you capture all the items of a potential sale. Maybe it was something you weren't thinking about. Maybe this was a Medicare sup sale and it's turning into a really large estate planning case. Who knows? But the more you're asking and the more you're jotting down and using that fact finder, it will take you to the right places you need to go. Absolutely. So firm believer in it, and there's some good examples of fact finders. So Secure Insurance Group has a nice fact finder, and I had a chance to look this over. Is anybody using this one right now in their normal, with the fact finding people using this particular one? Okay, cool. I like this too because it has color. I like the color elements because I'm a color learner and I remember stuff associated with color. And clients typically, if you run across a color learner too, they remember it too. Sometimes it just sticks. It's another way for them to get that information into their head and help them remember it. So in this particular one, you've got the 4 elements, the 4 areas of your assets. And this goes into questioning specifically on health expenses, retirement income solutions, extended care, and legacy planning. So you're not going to miss a lot if you're following the track on this. And I think everybody's got a copy of this fact finder in front of you. Yeah. You're not going to miss a lot if you're following this fact finder. This is a good one. This does a very nice job of extracting all the information that you will need to help provide the timely solution for that particular client. And it's got color in it too, and I like color. As you've got it in front of you here, it goes through and does a very nice job of collecting the demographic information, and then the health expenses, goes through the questioning, and then legacy planning in here too. So it does a nice job. If you're not using a fact finder and you're looking for one to start with, this is a great tool. Very, very nice tool, easy to use. You can probably get through it in 15 minutes on average, maybe somewhere in there, but very easy to do. And once you get going with it, it's even easier to do. It might be daunting when you first look at it. It's like, oh my God, I got to fill this whole thing out. As you get going on it and you get your cadence going on it, much easier to work with that tool. Many times you'll just memorize it too. The AMO, that's Advanced Markets Online, this is a tool that I have access to where I use a lot of advanced planning items in here, but it has a very nice fact finder in it. But what it's common with the one that you have that Brian has provided you today is it extracts the information that's very relevant no matter what fact finder you're using. It all should pull out different information pertaining to this. So of course you want the demographics. Make sure you're getting the names right, the husband, wife, the kids. If there's kids from a previous marriage, is that important?
Yes.
Why is that important?
They need cover too?
Yeah. Most of the time, unfortunately, if there's kids from a previous marriage, they're unintentionally disinherited when there isn't specific planning for those kids. It's not because they don't like those kids. They love those kids, of course they do. But if something happens to them and now they're remarried, that's where all the assets are going to go. They're going to stay with the current marriage, and the kids are unintentionally excluded. It happens all the time. It's called a blended family. It's a very good sales opportunity. If you find out there was a previous marriage or kids from that, start getting those details. Because there's very few times when there's actually been some planning done for those kids. And it's sad to see them just cut out. Or waiting for the new spouse to pass away before they ultimately get inheritance. And that's not a pleasant situation to be in either. Special needs kids and dependent family members, the fact finder should definitely extract this information. It's not that we have more special needs kids now than ever, but we have more recognition of special needs kids. And that's a good thing, because we're out there to help take care and make sure those kids are taken care of, and that there's some planning actually done for special needs kids. Also, particularly in the baby boomer generation, if there's a dependent family member that they're responsible for, if there's a grandma or grandpa or a mom or dad living with them, and they are their mode of survival is on you or on the individual you're talking with, we need to know that in the planning. If there's someone else dependent other than kids, other family members, very, very important. If you come across other members of the client's team, if there's an attorney already working with or a CPA, it's good to know who they are. If you have a network already where you have a CPA or an attorney that you work with, that's great, because you can refer business back and forth to each other all the time. But if you come across other members of the team, find out who they are. Maybe you can learn a little bit about the types of planning that they've done, their experience. Maybe you can work out a networking possibility with those individuals. So very important on the fact finder to extract that information as well. This is a question I always asked and was very disappointed on the answer. Do you have a will? It's one of the few closed-ended questions I would ask. And most of the time the answer is?
No.
No. They don't have a will. They haven't taken one step toward basic planning, which is the drawing up of a will, which you do not need an attorney to do. You can write up a will on your own. So do you have a will? Is there a trust? Is there a power of attorney in place? If so, what's it dated? Can I see it? I used to like to put an agenda together before the meeting, email it to the client, ask them for some of these documents if they had them already. It's easier for them to put that in front of you than having you wait for them to go rip through the kitchen drawer and try and find whatever it is they're looking for, because they're not going to find it. It's going to take too long and it's going to kill the meeting. So I would put that on an agenda item typically. If there's any documents that you need, whether it's copies of the life insurance contract or current statements, you can ask for that ahead of time before the meeting. But the trust, power of attorney, when's it dated? Can I see it? Moving into the assets and liabilities, again, any good fact finder should be going into the assets and liabilities. We need to know what they've got. Assets minus liabilities equals net worth. That's what we're trying to establish, is what they have and what they owe. And that includes any life insurance. That's one of the first questions we should be asking too. And there's a questioning section here we're going to talk about when to ask that and how to ask that. But we need to know if there's life insurance in place on them or any member of the family. And if you run into a business owner or any partner, or there's any partners in a business, that can take this meeting in a whole nother direction. You want to start finding out more about the particular business, asking those questions on it. So all these elements should be coming out in any fact finder you use, whether it's the one that Brian recommends with the nice color on it and the 4 different elements, or if you use a different one, but it should be pulling out this information in every scenario. This is the baseline stuff that you need, and of course you can get granular from here, but this is really top level stuff. We need these answers. We need them as quickly as we can get them so we can provide the best possible solution. There's another fact finder here. This is an estate planning fact finder, and I've got a couple of them up here. I'll pass these around. You guys can take one of those and just kind of pass it around. They'll make their way back to you in a few minutes. I just had this as an example, and this is also off of Advanced Markets Online. And this one's pretty hefty. I mean, it's almost 30 pages. It's a lot. And I wouldn't recommend that on every meeting. 30-page fact finder, are you kidding me? No way, I'm running in the other direction, I'm with you. But if you're getting into a situation where it's very detailed estate planning, you can see how much more information you're probably gonna need by taking a look at this fact finder, because it gets very involved in some cases. Most of the time, you won't need this much. But this is just an example of a more detailed fact finder. It does a super job. You will not miss anything in this one. You'll have every answer on estate planning that you ever wanted to know in this fact finder. So check it out when it makes its way around here. If you like it, if anybody wants a copy of it or an electronic version, just let me know. I'm happy to send it to you and the other ones as well.
Do you ever share like fact finders, like if I'm working with a CPA or estate planning attorney or elder care attorney, would it be helpful for them to have some of this information if they don't already have it? Or?
That's a great question. I think if that's someone in your network and you trust them, yes. Because if you're cultivating that solution together, we're working together on this, yeah, I'm okay with that. If it's somebody I don't necessarily know or has just been introduced to me, I might be a little less forthcoming. But if we're on the same team, yeah, I want you to have everything. Yeah, that's a great question. That's a great question. So the implementation of this tool, when I was a young agent, this was difficult because I felt like the one we were using at that time was about 6 pages. And I'm like, how am I going to get through 6 pages of this and not feel like I'm interrogating somebody? So the implementation of the fact finder is a skill in and of itself. One of the things I used to like to use was get a permission. I used a permission statement. And it went something like this. Joe or Jane, I'm going to ask you a series of questions so I can better understand what's most important to you. Some of these questions are going to make you a little bit uncomfortable, but that just means I'm doing my job. So when you get into questions about health and things like that, you're prepping them for it. You're letting them know, you're getting permission. And if I ask you for permission to speak about something with you, what am I doing?
You're getting the okay.
I'm getting the okay. I'm building
Rapport.
trust, rapport, exactly. If I'm asking you for that, in all the years I asked this, guess how many times someone said, no, you're not gonna ask me those questions. Never, never happened. They'll give you that permission, they'll respect the fact that you're asking them that, and then you have the okay, you've got the green light to move forward. It's a good way to do it without sounding, the interrogation is about to begin, I'm gonna ask you everything about your life. This is a much simpler, friendlier way to do it. Does anybody use the fact finder and have a different approach? Any thoughts?
I use the one-page simple one here most often, and this right here just gives me all the information I need to run an accurate quote. And this is the one I use 90% of the time. If I'm going into a lot of information, I'll use the full color.
More detailed one, okay.
More detailed. But if I'm just doing life insurance, I'm getting an initial approach. This is an easy, soft way to gather information I need because I can find out about the medications, the health insurance, what the existing coverages they have. I can make notes of what coverages I'm quoting. I'm getting all the personal information there, and this is the one I use. I write a couple hundred life pages a year.
Perfect. Brian, do you use any type of introduction into saying how you're going to begin your questioning, or do you just, it's so natural, you just kind of flow into it?
It's pretty natural. So when I'm with the client, I'm just basically, I just go into asking questions, and there's no question off limits because I'm needing the information to make sure I get an accurate quote. But one thing I really, really focus on is, in that, like the first meeting, I'm not asking for the social security number or anything of that nature.
Mm-hmm.
You know, I'm not gathering that. I'm gathering only information I need to run accurate quote. But when I get down to the existing coverages, I want as much detail on that existing coverage as I can possibly get from a standpoint, because if I'm trying to replace a term, I need to know where I'm at. You know, how many years are left? What's the premium? If they've got 1035 monies in there, I need to know if it's whole life. I need to know if it's what type of policy, if it's permanent life insurance with a PIN. And if it's permanent life insurance, I'm going to ask them, is it okay if we call the carrier? And I call the carrier a lot with the client on the phone to get an in-force illustration.
Cool.
Because I want to see that, I want to see how much cash value's in there. Because if I can do a 1035 exchange, that's where the real value is a lot. And I just to kind of give you a quick example, matter of fact, it just got approved yesterday. I've got one that a client had $33,000 of cash value, 1035, cash surrender value in his existing life policies. He was paying a little over $600 a month. And we 1035 that money over, and he only had $500,000 worth of coverage. We 1035 that money over. We were able to give him $1 million worth of coverage for $500 something a month. So we saved him $100 a month, doubled his coverage. But I wouldn't have done that. But he had 3 different policies we had to 1035 over. So we made 3 different phone calls to those carriers, got the illustrations, got it back, did the full proposal, and I just said, here's your current scenario, here's the proposed scenario, and I did 3 proposed scenarios. One that was $500,000 that had no additional premium, so I was eliminating the premium. One for $750,000 and one for $1 million. And I asked him which one did, and he chose the $1 million. So
Nice.
Really, really simple, but you really want to find out exactly what they've got, especially that $1035.
Yep. Excellent. Great example of fact finding in action right there. That is a great example. You're finding out the dollar amounts specific to those contracts, and you keep drilling in down from there. So that's perfect. That's a great example of utilizing the fact finder to extract that very relevant information in there. So I like the permission statement. If you have another way of saying it, or you're just natural with rolling into it, that's fine. But if you think it through a little bit, and you do it consistently, it makes it a lot easier, a lot more natural. Establishing a risk tolerance. I know we don't have a lot of FINRA people in here, but is understanding someone's risk tolerance important in life insurance sales?
Yeah.
Why?
Because you don't want to overstep your bounds, and you got to put importance into what you're doing.
Okay, good.
Somebody not see the value in it if they're very risk adverse.
Okay. Help them understand the value. Good. Any other thoughts?
Might be an opportunity to take at-risk money and put it somewhere safer for growth and security.
Okay, good. Good thoughts. If I ever find myself in front of the Missouri State Commissioner of Insurance and they ask me why I did something, and I can produce a document that shows I went through a risk tolerance questionnaire, is that going to help me or hurt me? Help me. Yes. I've known many people who had to go through that, and the more documentation you can provide, the better. You might never need it. Might sit in a drawer in a file somewhere for 30 years, but that's okay. I like to know that's sitting in there too. So I think it's good to have a sense of risk tolerance. If you're doing index universal life insurance as an example, when you go into the different possible sub-accounts in there, there might be 3 different versions of a Standard & Poor's 500 that you can put them in. And one might be, for example, cap and floor. Maybe it's 8% cap, 0% floor. There might be another one that is a higher cap, or there might be one that's very bullish where there's no cap. But you have to give up a certain amount, a certain percentage before you're in the money. Now, if I'm putting someone in that, I better be able to justify that if something doesn't go right. Or they come back to me later and question me, why was I in this highly aggressive Standard & Poor's? Well, we did a risk tolerance questionnaire. You're very bullish on the market. You told me this. We signed this. You can show them exactly what you did. But there is that element of risk tolerance, I think, that's important. Even though it's not a variable contract, it's still a recommendation within life insurance. So good to be familiar with risk tolerance, I think. And if you've got a tool for that, great. Just be aware of it. I like to mention it because a lot of sales in index universal life now, where I think it's very relevant to know the risk tolerance of the client. Effective questioning. We're going to talk through a little bit on this. Before I go to the next slide, which has the answers on it, what is the difference, and I'll put this out to anyone who wants to jump in, what's the difference between an open-ended question and a closed-ended question? Anybody want to take a shot at it?
Closed is yes, no.
Closed is yes, no. That is correct.
Open-ended makes them think.
Makes them think. Why does it make them think? Keep going with that.
Because they have to give an answer, not just a yes or no answer.
Okay. It puts it in there.
An open-ended question allows you to build on what their response is.
That is true as well. It makes them put something in their own words. Right? If I have to think through what you just asked me and put it back in my own words, am I more or less likely to remember it? More. Absolutely. Yeah, absolutely. So a closed-ended is a pre-populated answer choices with the respondent to choose from yes or no. And you get too many of those no's back to back, you're taking one step closer to the door, or backwards, yeah, depending on which is worse. Open-ended is ask a respondent to provide feedback in their own words. So you're asking them to articulate their thoughts. It's not easy to always get around closed-ended questions because we talk in a certain way with people where we ask that and we're trying to get things done quickly and extract information quickly. So thinking through your questions, the less closed-ended ones you have, the better. The more it's going to be like a conversation where you're just talking with a friend and trying to understand what it is that's important to them. So open-ended versus closed-ended, leaning towards open-ended being more effective. Speaking of questioning, does anybody have a question that they use every single time at every meeting that they'd like to share? Is there any one question you love to ask that helps you understand the client?
I don't care if we're talking life insurance or annuities
Mm-hmm.
or what, I always ask people, what is the number one purpose of this? If it's money you have sitting at the bank, what's the number one purpose of that money?
Okay.
And you get a blank stare most times.
Mm-hmm.
Makes them think.
But it helps you to understand what that asset's there for.
Right.
Do you ask that every time?
Pretty much every time we get talking about anything beyond Medicare. we
Cool.
say, well, we got this IRA, so what's the number one purpose of that IRA?
Good.
Like, well, it's money. Yeah.
Mm-hmm. Excellent. Great question. Any other questions? I know you guys have got some good ones. It's okay to share them. I'm going to share a few.
I usually ask them, what they know about life insurance.
How do you say that?
Well, a lot of, my clientele, they're getting married, they're having children for the first time, they're just getting into their careers.
Mm-hmm.
So I try to approach it about, at least as a friend, in a sense, what do you know about life insurance?
Can you tell me about some of your experiences with life insurance?
Right.
Something like that?
Yeah.
Okay.
What have you heard?
Mm-hmm.
Because, people have a lot of different preconceived notions.
Yeah.
Yeah. Especially this industry, it's so, it can be very saturated sometimes.
You bet. Yeah. My Uncle Mike told me this is all a ripoff. You ever heard that? Yeah. Yeah. I've heard that before too, many times. That's a great way to ask it, Israel. There should be a few go-to questions that you have in every interview. Yes, sir. Did you have a comment?
I have a question with people that are still working, the younger people.
Mm-hmm.
Do you have any life insurance outside the workplace?
Good. Yep.
Because, and I follow up with companies that are constantly laying off, changing budget, changing this. And the only safe insurance is to have your own outside the workplace.
Yeah, absolutely. That's a great point. And people think that it's always portable. Many times, right? Like, oh, that's coming with me. If I leave, yeah, it's coming. It's not. I hate to be the one to tell you, but that's part of what I do and makes you a little uncomfortable, but this does not come with you if you change jobs, unless there's some other arrangement.
And I use that example of myself, companies that I've worked with, that they say it's portable, and if they say it's portable until you're ready to leave, and then nobody knows how to transfer it.
Right. Yep. Great point. Yeah. When push comes to shove and you're now out of that employer's world, you're not really sure if you've got coverage. If something happens, it's not a good time to find out that you don't if you die, right? Not a good time. Never a good time to die. But here's a couple questions I've pulled from agents that I've worked with, some high-performing agents that they like to ask every time. You can steal these if you'd like. Can you tell me about some of your experience with life insurance in the past? Kind of where Israel was going with what he was talking about. What are some of your retirement goals? They can't say no. I can't say no to that. I got to give you something, right? What kind of financial planning have you done? Well, a client's not going to say no to that either. They're going to expand a little bit. They're going to talk. They're going to hopefully get a conversation going with that question. Help me to understand some of your current savings plans. This is a good one. I never use this one, but I love it. This guy I know, an agent that I work with out in Idaho, uses it all the time. In your own words, tell me what your retirement looks like to you. Is that not the classic open-ended question that you have got to think of something like, it's golfing 5 days a week or whatever? But that is going to put them on the spot. What does your retirement look like? And the answers you get are going to vary wildly. But those are some questions that I liked. Some I used. The last one I didn't. I stole that totally. Any other questions come to mind that you guys like to use or ask in every scenario? Are you thinking of a new question you'd like to ask?
I don't normally ask about budget, or what they think this will cost.
Mm-hmm.
I probably should ask that some more.
Is there a certain amount of money you're thinking you can allocate toward this program? No. Yes. The answer will always be significantly less than you were hoping to see as the agent. But that's okay. You want to zero in on that number, right? And you can get to that number by doing a needs analysis or however you get to it. But yeah, that's a great point. Any other thoughts or new questions that you want to try out? Try it out on me.
Once you find out how much insurance they have, always ask the question, is that enough? Is that the amount that you're looking for? Because I'm quoting, and if they've got $500,000, I'm always quoting $500,000, $750,000, and $1 million.
Mm-hmm.
I'm always quoting at least 2 levels up. And I always do my levels in quarter $1 million increments, typically, if it's term insurance.
Yep.
And then ask if it's term insurance and they've got, 15 years left, I always ask about the length of the term. Is that 15 years what you're thinking? What about mortgage? Where's the children at? Questions to maybe get them to a 20, 25, or 30 year term.
Nice. Yeah, and $500,000 is the new 100,000, right? So in most cases, $100,000 isn't going to do much. $500,000 is a good starting point. I agree with that. And then going up on those incrementally, that's great. Great way to do it. Always have some good questions. If you don't have some good ones, you can borrow these or talk amongst the agents in the room with you and come up with other ideas and thoughts. Some good questions, a few good, well-placed questions will make that fact finder quick, very quick. Because in one well-placed question, you can answer maybe 3/4 of a page of the information you need to get on that fact finder. So a few questions properly placed makes a huge, huge difference. The financial pyramid. Is anybody familiar with this concept? Excellent. All right, it's all new. Good. Financial pyramid is something I borrowed with permission from the American College of Financial Services. And this is a tool that they have in their Financial Services Certified Professional, FSCP, got that right, in the first chapter, in the first book, in the first class. And there's a reason why it is in there. It's a really nice tool. Hopefully you will like it. It is something that I've had several agents adopt and incorporate into their practice, and I've got a couple of examples of that. So the financial pyramid, let's get going on that. What does it do? It raises awareness of financial needs. It's good for initiating a discussion. It's a jumping off point in many cases. Not unlike the Egyptian pyramids, it is not built overnight. It takes time to do it right. The average pyramid, they estimate in Egyptian times that was built, took how long to build? On average. What do you think? Less.
30.
Less.
10.
20 to 25 years, which is a long time, still a long time. I used to think it was like 100 years too. I'm like, I don't know why I thought that, but it's 20 to 25. And that's the point of the financial pyramid, is it's not built overnight. This is an ongoing construction project, as it were, where you're extracting information using a fact finder and understanding through annual meetings, quarterly meetings, however often you meet, what has changed, what's different, and that affects the building of the pyramid. It helps to organize and prioritize goals, because many times the client, they don't really know. They got a kind of an idea, something looks good, but they're not really sure. It's kind of like that retirement question. What's a retirement look like to you? I have absolutely no idea. This helps to organize and prioritize those goals. That's what the pyramid does. So let's take a look at the pyramid. As you look at the pyramid, hopefully you guys can see that okay in the back. This is the largest I could get this graphic for some reason, I'm not sure. So building the plan from the bottom up. So in your conversations, particularly your initial conversations where you're using your well-placed questions, you're filling out a fact finder, you want to find out what's going on in the foundation of their wealth. Is health insurance a good idea to have? Yeah, it's a good idea. Definitely a good idea. I don't care who you are. You got to have health insurance, or you're really running with high risk. Auto insurance, is that mandatory in the state of Missouri?
Yes.
I have to have that to drive a car. Same in Colorado and every other state in the union, I think. Homeowners insurance. If I want a mortgage, probably got to have it. Pretty necessary. Disability income, maybe through work, maybe not. Worth finding out for sure if there is something that could be affecting them if there is a disability, which is all of us. Life insurance. Do you have any? Tell me about some of the experiences you've had with life insurance. If it's possible, can you have a copy of your annual statement before we meet? I would love to take a look at it and give you a no obligation analysis on if that life insurance contract is still meeting the goals that it was originally supposed to, even though your life has changed 10 years now from when you originally got it. Emergency fund. I saw a statistic on the emergency fund. Over 70% of Americans cannot go 3 months without a paycheck. 90 days without a paycheck. What's that?
So I think that's less time.
Yeah.
Like 2 months.
I thought it was actually long too, but that's what the statistical average is right there. They can't make it 3 months. Is an emergency fund necessary, important part of your planning?
Yes.
Yeah, I agree. I think it's paramount. In the building of a foundation, you got to be ready for anything, and that's what an emergency fund is anything. Anything comes at you. You got something there that you can lean on. And the final corner in the pyramid is the question I always ask, do you have a will? And that's one of my few closed-ended questions I ask, but we need to find that out. And most of the time the answer is no. I don't have a will. I don't have a will.
On the emergency fund.
Yes.
Also on that, it's important to know how financially stable they are if they have an emergency fund, because if you sell them a policy, can they maintain it?
Yeah.
You know,
Mm-hmm.
I mean, that helps you know where they are affordability wise as to what you can sell them that's going to benefit them long term.
You bet. Absolutely. Very, very important to find that out. And I think as you discuss the pyramid with a client, this is actually a very client-friendly tool because it doesn't take a lot to understand what we're trying to accomplish here. So we've talked a little bit about this row here in the Wealth Foundation, which is a lot of your initial conversations will be on that row because you're trying to understand what's in place. You just found out the client you're sitting down with doesn't have health insurance, doesn't have auto insurance, doesn't have life insurance, and doesn't have a will. We got a lot of work to do. There's a lot of opportunity here to help this person out. The wealth accumulation is the next set of blocks as you go up. Investments and savings. If you're investing heavily and you don't have 4 of these components down here, could that be a problem?
Yes.
Yes, yes. Disaster is on the way in many forms. But the wealth accumulation, and you'll learn a lot about what they're saving, what their investments are, if there is any, what direction they're heading with that. Again, your fact finding will extract this information. Wealth preservation would come on top of that. So long-term care insurance, if there's any long-term care insurance at all, in most conversations, there's none. There's, I would say, 8 out of 10 times there's no long-term care planning been done at all, on any level. Umbrella liability insurance, and this is part of the preservation. I've got a large enough umbrella in here, so if I get sued in an automobile accident, I can cover that. Umbrella, very important. And then other insurance, I think what they're alluding to in this block is if you run into maybe a business owner, if there's any business continuation or succession planning, that would be kind of other insurance. That's where I would kind of put that one.
Like key employee.
Sure, key man, cross-purchase, entity purchase, stuff like that might fall into other because you're trying to preserve the wealth of the business. If something happens to you, something is in place. And then finally, wealth distribution. Now you can't have wealth distribution down here. It's got to be up here because you have to have these components in place. Estate planning, wealth distribution. What am I going to do with my millions of dollars when I die? Where is it going to go? Who's been nice to me that I can give them all this money? Retirement income. I've got millions of dollars. Now I need to make it last for projected 30-year time frame on average, since we're all living longer. Let's hope that works out. And gifting. Give some money away along the way so that it's not part of my estate and there's not a bunch of tax bite at the end. So it's very logical in the construction of the pyramid. Any thoughts on the pyramid?
That's awesome.
Like it?
Yeah.
Okay. Is it the most horrible thing you've ever seen, or is it pretty cool? Pretty cool? I liked it immediately when I saw it. And so did many of the other people that were in the class that I was teaching when we presented this. In fact, it was so popular. Gentleman I know out in Boise, Idaho, by the name of Matt Sevieri. Matt has given me permission to utilize this. He branded the piece, and he gives it to every single client he meets. It's what he calls his icebreaker. This is what we do at Sevieri Insurance, is we build pyramids.
Can you email that out?
Absolutely. Happy to do it. I don't sell life insurance, I build pyramids. That's an interesting way to position yourself.
It kind of helps, the client, learn you, because the clients are always trying to figure you out, what's your angle or agenda, and it's a really awesome visual to kind of, okay, I'm dealing with a professional.
Yep, that's a great point, and that's one of the reasons he adopted the piece. He's a successful MDRT agent, President's Club, 5 years running, very, very well organized. But he saw this and he branded it and started using it immediately. And he uses it with every single client as an icebreaker. It makes them look more professional. It tells them very quickly what I do. You're not having to explain a lot if you're just telling them I build pyramids. Here's a copy of this for you. Please keep that. We can talk a little bit more about it in our next quarterly meeting. Brand the piece, use it as an icebreaker. Pretty cool idea. But with all building, there are obstacles. There are obstacles to pyramid building. Some people are trying to stop you from building pyramids in a nice way. Dealing with financial need is overwhelming. Have you ever sat down with that person?
Mm-hmm.
You sat down with that person? I sat down with that person a lot. It's too much, I just can't figure it out. So I'm gonna do nothing. Can't afford it. Yeah, cost is higher than my ability to pay. You ran this illustration for me, it's $400 a month. I got $75.86 I can allocate towards this. Where are we at on this? It costs way too much. We got to figure that out. Another obstacle, I'm not confident enough to make sound decisions. Anybody sat down with this person? I'll describe this person. He's my brother. He is one of the smartest people I've ever known. Highly educated, very high-level thinker, but he cannot balance a checkbook to save his life. I don't know why. I don't know what the disconnect is, but he's not confident to make the decisions. So he hires you. He hires you to make the decisions for him because he is not confident in that part of his life, even though he's a high performer and a very smart guy. He just cannot feel the confidence, and he's at the point now where he's not going to learn. He's too old to learn. That's what I tell him.
A lot of times the confidence one use the I can't afford it because they don't understand it.
Right, yeah. You got to have something to come back to, right, if they say that? Oh, the cost is too high. Well, if the cost is too high, let's take a look at the need here. We've established this need. You have a newborn child, and you work, you're the breadwinner, your spouse does not, but you need $500,000. Well, let's figure out how we can make this work. Maybe the index universal life at $400 a month is too much, but maybe a 30-year level term at $100 a month fits. We're meeting the need. That's the most important thing. We're meeting the need in that scenario. So you're overcoming the obstacle to building the pyramid with a lower cost. And there's nothing wrong with that. Maybe it has a conversion option within that term policy and you can convert it into an IUL in year 3 or whatever. You have an eye on that next move for the client, but you're meeting the cost today. They can't afford $400 a month, but they can do $100. We'll make it work. So these obstacles are going to be there in front of the pyramid building. Be ready for those questions, or those objections rather, and how to combat that. This is probably the most common, I would say, that we run into in the obstacles of pyramid building. Any thoughts before I move off the pyramid? Cool. Okay. You've survived Module 1. Congratulations. We have rapidly moved into Module 2. No, it's not a break, sorry. I wasn't setting you up for that. But Module 2 will bring us up to the break, and then you guys can get up and do some jumping jacks, if you prefer. So Module 2, we're going to talk a little bit about needs-based selling and telling a good story. Because you're not in financial services, you're professional storytellers. That's what we do. We tell stories. We help people remember things and learn. Needs-based selling, aka consultative selling, not a new concept, but something that needs to be understood a little bit more clearly. So it's customer-specific interest to focal point of the sales process as opposed to the transactional model, which puts emphasis on the benefits of their product. What does that mean? It means I am sitting in front of you to sell you Index Universal Life, whether you want it or not. That's a transactional mentality. I've got the greatest product in the world. Just listen to me, I'll tell you all about it. Or listen to the client through fact-finding and open-ended questioning to understand what's important to them. Consultative selling or needs-based, what do you need? Not what I'm selling, what do you need? As we talked about fact-finding, does proper fact-finding support a needs-based model? Absolutely. Tell me why absolutely.
Because through the fact-finding process, you'll generally have not just this scripted conversation. The conversation will keep going. You'll get to know that person and know what makes them tick, what do they like, and that will help you when it comes to what is their need. You have the facts in front of you and you've had that conversation to build that rapport.
Awesome. Nicely said. You guys all hear that? Well said. Well said. Any other thoughts on proper fact-finding supporting that? Sir?
The fact-finding also has to be, like the agent really needs to be familiar with the area where they're at, the jobs, what they pay, things like that. Because if you talk to a client, he says he works at this, and you know the average wage of that factory is $12 an hour, then you can, it's set in your mind where their budget is through just finding out where they work, what their habits are, things like that. You'll know where they're wasting their money and where they can reallocate some money through just talking to them and getting to know them.
You bet. Absolutely. Great point. And that's fact-finding in action, right? And that would support this model of consultative sales process. So I agree with you both on that. It is absolutely paramount toward consultative selling is appropriate fact-finding. Needs-based core elements. I like to research a potential client before I meet them, if possible. Maybe that's LinkedIn or Facebook or talking to people who know them. Whatever I can gather intel-wise, I think is very important towards needs-based, because at least now I have a little bit of insight into if you're a Chiefs fan or a Broncos fan. And that's really important. Or a Cowboy fan, for crying out loud. So this would be good before engagement. Some of the core elements, building trust with a client during the process. What was one of the ways I mentioned earlier in Module 1 about building trust? Needs analysis, okay, bless you.
Asking permission.
Asking permission, yes. That is a good way to build trust. Needs analysis is building trust. How else do you build trust?
Listening.
Listening. How do you show me you're listening? If you're with a client.
eye contact,
Mhm.
you know, even repeating a couple things to them.
Restating it.
Yeah, you know, especially, you know, with the older clients, you know, oh, okay, now you know the name of my grandchildren and the dog, and those small things
Yep.
can really, really matter.
That helps build trust. So one of the things Israel said was restating something. So what you're saying, Israel, is retirement at 65 is very important to you. Restating it. And then if they say, no, that's not what I said at all. Oh, okay, well, what exactly did you mean? Yeah, and it does build that trust. What else builds trust?
By answering the question they ask.
Answering the question, yeah. And what if you don't know the answer?
Telling them you don't know, but you're researching, get back to them.
Great. There's nothing wrong with not knowing it. That was one of the things I was most afraid of when I was a new agent is you're going to ask me a question I do not know the answer to, and it terrified me. So I was in a big hurry to tell you everything I knew. But when it happened and they asked me that, I didn't die. I lived. I lived, and I'm here. And it's okay, because we don't know everything, and it's okay to say that. You know what? That's a great question. I'm going to have to look into that.
My response is always, you know, things are always changing so fast in this business, we can't know everything. So
Great. Great way to handle it. How else do we build trust in the process? What's the first thing you can do before you even say anything that builds trust?
How are you?
How are you? Even be on time. That's right. My dad always said, if you're not 15 minutes early, you're late. Did anybody else's dad say that? Or mom? Yeah? They were right. Because if you show up late for that first meeting, you're done. You're done. You might be able to overcome it, but it's going to be very difficult. It's a high mountain to climb.
and you better call if you're going to be late.
Things happen in life. So, you know, I got a flat tire, I'm on the freeway, blah, 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 whatever. They don't care about your drama, but you told them what happened. It happens sometimes. You can overcome that. But if you show up late and you're cavalier about it, forget it. You're done. Very, very difficult to overcome. Very difficult. Yes?
Something I do to build trust is when I get to their house, I always look around. There's always something that they're proud of that they display.
Mm-hmm.
And, you know, you
Like a Chiefs banner.
Yeah, you pick that out and, yeah, it gives you something to talk about, you know, before you get into it.
Sure, absolutely. Yeah, it helps build a little rapport, right? You're building a little trust.
First impression when you walk in the door, be energetic and smiling.
Mm-hmm. Very important. Like, hi, very nice to meet you. You can shake my hand. Very nice to meet you.
Something else.
Or if I show up and I'm just like, yeah. Where do you want to sit? Over here? That's fine. Not good. What's another way to build trust right away? What did I try to do to build trust with you when I walked in this room before I opened my mouth? I was on time. I was early, Brian, right? I was early. Okay. Am I dressed professionally? Does that help build trust? This man has a necktie on. He gets it. It helps. It's not the be-all, end-all, but it helps. It helps if you have a professional image when you walk into that room. You haven't said anything except you've said everything. Right? Great follow-up questions. If they tell you something, like they're a graduate of Princeton University, that's very interesting. I don't know very many Ivy League people. Tell me a little bit about your experience at Princeton. Great follow-up question. They're giving you something, you're building on it. You're building on that fact. And you're building rapport, you're building trust, because I am interested in what you just told me enough to ask you more about it. I'm not focusing on my favorite subject in the world, which is me. I'm focusing on you. That is building trust. Active listening. How do you actively listen to somebody? You guys are doing it now, some of you. How are you actively listening that I know you're listening?
Yeah,
Taking notes, man. Eye contact.
Eye contact.
Taking notes.
Notes. Better be taking notes.
Leaning into your conversation.
Leaning into the conversation. How else am I actively listening when I'm with a client?
Responding back to their comment.
Yeah. That's a great idea. I never thought of that. What was that?
Echoing.
Echoing. Restating what they said. I'm actively listening if I say that back to you. So what you're telling me is that the most important thing to you is being able to golf 6 days a week and retire? Yeah, that's what I'm telling you. Okay, let's make it happen. Actively listening, engaged, nodding, smiling. Little things that we do to show that we're paying attention. It goes a long way with the client rather than facing someone who is just that. Who wants to talk to that? I don't even want to talk to that. And I'll talk to anybody. Actively listening builds trust. Those are the core elements of needs-based selling. We're going to get into a subject that is near and dear to my heart. Referrals. Is it okay to ask for referrals while using a needs-based selling model?
Yes.
We got 2 yeses. That means we got a lot of no's or I'm not sure's.
Yes.
Yes. This side of the room is way too quiet. Is referrals part of a needs-based selling model? What do you guys think?
Yes.
Always.
Yes.
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 Camille?
Yes.
Yes. We getting yeses? Back row.
Yes.
Okay. I agree. It's the lifeblood of your business. And I'm going to prove that in the next couple of minutes. Why or why not? Because it's part of what we're doing. It fits into the overall process of the conversation. You're building enough trust to ask for referrals. If I haven't built trust and I ask for a referral, not so much. When's the best time to ask for a referral? This will definitely spark debate, and that's what I want. When do you ask for referrals? Anyone?
Yes.
Yes, you do. That is true. Yes, you do. When do you ask for referrals? When do you guys like to?
At the very end,
And when's the end?
whenever I basically deliver the policy.
Delivery of policy,
Yeah.
you ask for referral.
Yeah.
How does that conversation sound?
If there's any, if we have anybody else that I could help, like I helped you, any friends or family that might not have the setup that you have, how we financially got you guys set up and protected the kids and yourself and your wife, type thing like that.
Cool, love it. Policy delivery. Any other time you can ask for referrals?
I think in the beginning, when you're building a trust and saying, if you like what I see and everything is
Okay.
good, in the end, if I asked you, would think about people that you might know that could benefit what we do in the same way that I helped you.
Okay, great.
If you set it up in the beginning of the meeting, they think about it while you're in the meeting.
So before the meeting starts, somehow you've,
Like once you've done your soft opening,
okay,
feels
kind of put that right in the opening remarks?
so that while you're doing the meeting or in the appointment, they're thinking, oh, you know what, my brother might want to see her. And then in the
My cousin Mike, he totally needs this.
and then ask again at the end,
Okay.
during the meeting or during the appointment, did you think of anybody that?
Nice. I like that. So they're
that
thinking,
while.
cool, good technique. Any other thoughts on when to ask for a referral?
I'm a firm believer if you do bring a tremendous amount of value, they got a tremendous amount of confidence in you, you'll never have to ask for referrals. They will just absolutely blow it. I mean, if they perceive extreme value, you'll never have to ask.
Interesting. I think if you blow it out of the water like that, yes, absolutely, absolutely.
And I think if they have enough trust in you, a lot of times, they'll automatically tell people about you.
Okay. All
The
right.
experience they have, the process you put them through, the experience they have is one that they perceive value. At the end, every time, you're gonna get referrals and you're gonna have to even ask.
Okay.
I mean, there's gonna be tons of them.
Okay.
I always wrap up my calls with clients, whether it's on a sale, follow-up, whatever, with, there's two things that I always ask, and at this point, if they've been a client for a while, it's, yes, if I need anything, I'll call you, and yeah, didn't my sister so-and-so, so I always ask, if you need anything, or I always tell them at the end of the call, remember, if you need anything, don't hesitate to reach out and let me know, or if you know anybody else who needs any assistance or has any questions, have them feel free to reach out to me. One of the biggest things that I'll get asked from people I found with not doing that, with the giant thing, is people just coming in and going, hey, is it okay if I send so-and-so to you? Because people have this perceived notion that you might be too busy and that they can't send that to you, so they want that permission. So not necessarily asking for the referral, but just giving them that permission to let them know that you're an available resource.
I like that.
For them.
I like
Not
that.
even asking for the referral, just I'm a resource, and like.
That's great. That's great. You're right. A lot of people do assume that you're too busy. You might be too busy. I don't want to. I don't want to tax this guy's time. He's done so much for me. This is great. But if you tell him, you know what? I've got enough time for anybody that you know that could benefit from the same conversation. Something like that. Yeah, that's great.
So do you all hand out cards at the end, or extra cards to hand out, or?
Thoughts? Business cards? He's shaking his head yes. 2 yeses back there. Okay. Business cards for the referrals so they can pass it along.
I'll tell you one of the best things I did. I got an electronic business card, and every client I meet with, I ask them pull out their smartphone, and I have them scan my business card. That way, all of my contact information automatically goes into their phone.
Cool. Welcome to the 21st century. Love it. Love it. Cool. So, kind of getting back to this point, there's various places to ask. You can fit it in to make it yours, however it works for you, but I would defer to ask somewhere. And I'll give the rationale for that. Is anybody familiar with the term Net Promoter Score? Some of you know it. The majority do not know it, Net Promoter Score? Okay, that's all right. It's an index that measures the willingness of customers to recommend a company's products. Now think of company, don't think of you, think of company, like Ford Motor Company, large company. To recommend companies' products or services, a new Mustang, for example, it is used as a proxy for gauging a customer's overall satisfaction with the company's product or service and a customer's loyalty to the brand. What does that even mean? Well, if you've bought anything in the last 5 years, and I mean anything, you'll probably get a survey, right? How many of those do you get a week? I probably get 5 at least on a good week. What they're really wanting to know buried in that survey is if you'll recommend the company. That's the most important question in the 15 questions that you might answer. That's the one they want to know. That's Net Promoter Score. Am I willing to promote Jason to Camille?
Yes, you are.
That's a home run for Ford Motor Company or whoever's doing the survey. Everybody you buy something from. That's what Net Promoter Score is. That's a long way around understanding it. That's on a macro level. And a micro level is how can we measure your score? Referrals. If you're not getting them, your Net Promoter Score is below 5 on a scale of 1 to 10. Probably a 2 or a 1. If you're getting them, you're a 10. You're up there in that 9-10 range where someone is actively saying, you've got to work with Israel. This guy is great. Call him now. That's referrals. That's the power of raising your own personal Net Promoter Score. How do I do that? By getting more of these. How do I get more of those? I ask for more of those. And I do the work necessary to warrant being referred, which means I'm the best. I'm going to do everything for you, or whatever it is your story is. So Net Promoter Score, I like to talk a little bit about that on a large level because you're engaging in it all the time when you take those surveys, even if you don't always take the survey. That's what they're trying to find out, if you're going to promote their company. How do we get promoted? Referrals. Raise your Net Promoter Score. Raise it up. We're not in the financial services business. We're in the storytelling business. Once I realized that, this job got fun. It got a lot more fun when I wasn't selling life insurance. I was telling stories. What is your story? Hopefully something came to mind on that. There might be a story or 2 or 3 that you share with clients. Maybe there is, maybe there isn't. But I'm going to try and convince you that it is important that you have at least one. At least one that's a go-to story. Being able to connect emotionally with a story. I've never known a single person to connect emotionally with a 35-page illustration. It's not easy to do. No one connects emotionally with a bunch of numbers on paper. They connect with you and your story that you're sharing with me right now. That's what they're going to remember. That's who you are. That's how you're going to get a referral, hopefully. Connecting emotionally with a story. If you're able to connect with someone emotionally, you're more likely to get action today as opposed to someday. And someday is never. Any parents in here? Parents? Lots of parents. Okay, I'm a parent. How do kids learn?
By watching their parents.
Watching their parents, that's one way. Stories? I heard it. School. I used to tell stories to my son. I still do. He just doesn't listen as much as he used to. He's 17 now, he knows everything. How do kids learn? I would argue they learn through stories. If your kids ever had a favorite book that they wanted you to read them, there's always one book that comes into mind, parents, that just shot into your brain. I know it did, I could feel it. They wanted you to read it to them 50 times a day before they were going into kindergarten when they weren't reading themselves yet. And they remembered every single line in that story. Why? The repetition, but it was a story that was interesting to them. So once upon a time, I had a 5-year-old son. And my 5-year-old son was getting ready to go to kindergarten. And I used to read him Thomas the Tank Engine. Anybody? Thomas? A little love for Thomas? He was great. He's still a good friend of mine. So I would read him Thomas the Tank Engine, Thomas going to the train show. In this book, it talked about Thomas had to get from A to B to make it on time to the train show. So my son loved Thomas. He loved the story. I read it to him 3 times a day at least, and we talk about it. But in that, when he started getting ready for school and he was responsible for getting up, getting dressed, getting his teeth brushed, I would say, you're going to be late for the train show, Thomas. You're going to be, his name isn't Thomas, but I would use that as the story. I would say, you don't want to be late for the train show. You got to keep moving. And he would relate to the story on, I'm not going to be late, Dad. I'm not going to be late. And he related that to the story of Thomas. It's just a simple little thing, but he knew that he didn't want to be late. So Thomas helped him be on time. But it was a story. He remembered it, and he was always on time. And now he's 15 minutes earlier, he's late, right? His grandfather would be proud that he learned that. So if you're able to connect emotionally, you're more likely to get action today than someday. Kids learn that way. We're not much different than kids. The elements of a good story are circumstances, characters, the problem or the catalyst, and the outcome. So when Thomas, he was the character, there was a bunch of other little trains, Gordon, some of his friends, didn't want to be late for the train show. The problem is he got up a little bit too late. The outcome was he ended up making up time and got there on time. But that's the element, the basic elements of a good story. As you're constructing your stories, this makes it so much more interesting to the listener if these elements are present. If there's a point to what you're saying, I'm going to be more engaged. Know your audience. Not everybody wants to hear the Thomas the Tank Engine story, I know that. But your audience, you need to know what story would be appropriate for them. That's why it's probably good to have more than one with these elements in it.
A lot of times I've seen, talking about other clients you have with a potential new client can help, really move some actions of, okay, you have other clients, okay, other people trust you.
Yeah.
If it's not referral, it's,
Mm-hmm.
So.
Good point. So story time. So once upon a time in the early 1990s, there was a young life insurance agent who was working mortgage leads. And what a mortgage lead was at that time was going to the county and finding out who just bought a house, looking up that information, getting the exact amount of the mortgage, and then sending out a mailer to that individual, which consisted of a pink postcard, which was prepaid, and they could say, yes, I want information on my mortgage protection, and send it back in the mail. So I would do hundreds of these during the course of 1 week, wait a week, do another 100, do another 100, wait a week. So I'd get 3 or 4 of these a week. Those would be my mortgage leads. So I get my first mortgage lead back. I'm very excited. I go out there to meet the client. It's a 52-year-old female named Shirley, her 58-year-old husband named Jimmy. Shirley worked for Pinellas County down in Florida as a bus driver. And Jimmy was partially disabled and did not work. They had a $148,000 mortgage on their house. So Shirley was very worried that if something happened to her, Jim was going to have to leave the house. He wouldn't be able to stay there if something happened to her. The only income was hers. They wanted to protect the house so Jimmy could stay there. So I write a 20-year, $150,000 term for them with a conversation about getting together to discuss more financial needs in the next quarter. Policy is delivered. Shirley's covered for $150,000. 2 months later, I get a phone call. Shirley was killed in a car accident. So I processed the claim. My first mortgage lead became my first death claim. So I go out to the house. I'm holding a check for $150,000. Jimmy answers the door. He welcomes me in. We sit down at the kitchen table that I sat at 2 months ago in the same chair across from Jimmy, who's in the same seat where Shirley was sitting, who's not there. Jimmy looks at me. He's got tears rolling down his cheeks. He says, Paul, am I going to have to leave the house? I looked at him. I had tears rolling down my cheeks. I said, Jimmy, you're not going to have to move. And I slid a $150,000 check over to him. Do we have all the elements of circumstance? Shirley and Jim meeting for mortgage protection? Characters, Shirley, Jim, young aspiring life insurance agent. Problem, mortgage protection, Shirley dying. Outcome, Jim didn't have to move. He got to stay in the house. I told that story a lot when I was selling life insurance. It wasn't a huge estate planning case. It wasn't millions of dollars, but it met the objective. Jimmy got to stay in the house. It's a story that connects, hopefully, emotionally with you on some level. Story can be your story, why you're in the business. What got you interested in financial services in the first place? Was there something, an event in your life that brought you to being an agent to sell your products? If there is, I would consider sharing that. What happened to you? Maybe life insurance played an important role in your life. Maybe you lost a parent or guardian when you were young, and there was life insurance there that paid for your college or kept you in your house. It can be a client story if it touched you. The story I just told you touched me deeply. Find a story to tell. It can be yours. It can be someone else's. You can borrow mine. I got a bunch of them if you want some more. But it's good to connect with people emotionally by telling a story. This is the technology piece we're about to attempt. I'm going to try and play you a very short video from lifehappens.org that tells a really good story. It's about 4 minutes long. I'm going to see if I can pull this off. If you can bear with me for 1 second.
My phone rings. It was my dad, and he was just wailing. And he said, Karen, he's dead. Mike died.
It was a shock. I mean, it was a complete shock.
My first thoughts were, this isn't real. The doctor said to me, I'm so sorry, we just couldn't save him. And for somebody so healthy, he crossed the finish line and he collapsed and he died.
Never in a million years did I ever think anything was going to happen to him. And the good thing for me, I was able to put my arm around Tracy and say, Tracy, don't worry, you won't have to worry financially. Everything will be taken care of. Well, Michael, at age 22, I had him buy a whole life policy. When him and Tracy got married and they got pregnant, I had him buy a large amount of term insurance. So that if anything happened, Tracy would be able to have income from it.
Look at that really big lily pad. The life insurance has allowed me to move forward in life. It bought me some time to figure out my new life without Mike. I don't know what I would have done without it.
Tracy and Josie and Calvin are doing very well.
Josie and Calvin are so much like Michael. They have a silly personality and are playful. Mike is very much a part of every single day of our lives.
Well, life insurance is important. You never know until you're gone how important it is, but it will take care of your family. I really believe that purchasing life insurance could be one of the most loving things that you can do. I know my brother's family's okay today because he did buy life insurance.
I realized we didn't have the visual on that, but it was a story of Mike and Tracy. Mike is in his 30s, 2 kids, beautiful family, decides to run a race, maybe a 10K, I'm not sure, and drops dead, basically. And the discussion on that was there some planning in place for Tracy and the 2 kids? And they interviewed the brother, his sister, and Tracy, and talked a little bit about it. I think about this story, I've seen it many times, but every time the gun goes off and I'm running a race, I think of this, ironically. And I'm still here, thank goodness. But it's a story that conjures up a little bit of emotion. Did anybody get a sense of emotion when she was talking about losing her husband?
Yeah.
Okay. What else did it make you feel or think?
About the kids.
Kids?
Fear.
Fear? Tell me more about that.
Just it sets like listening to it sets up like, oh, what if that would happen to me? Like,
yeah.
Do I have what I need?
Yeah, absolutely. Could you recount a story like this to a potential client? Sure. Yeah. It doesn't have to be you. It doesn't have to have actually happened to you or your family to retell the story. You can say, I learned this from a colleague that I work with. It was a young family, very tragic situation that turned out as good as it possibly could, despite losing a loved one. In this story or the one I told you, did it make you feel anything else? Did it make you feel anything? Was there any kind of a connection in either story?
Maybe it can happen to anybody at any time.
Yeah.
Moves you to action.
Moves you to action?
Yeah. Or
Make-
kind of gives you, some motivation.
Yeah.
You know.
Think a little bit harder about my life, maybe? Yeah, what I should do. The connection of a story is very, very important to what we do. Connecting those things in their context, their wife, their husband, their kids, is how they're going to remember it. That's what they'll remember. They're not going to remember the numbers as much as the connection you made emotionally telling that story. Does anybody have a story that they share with clients in any situation? Yes.
I always tell them about when I was 16, my grandfather died, and I remember my mom and dad sitting around the table with all of my mom's brothers and sisters, and they were all arguing over who was going to pay for what because he didn't have any life insurance. And my dad finally pulled his hat off and put a $100 bill in and said, "We got to start somewhere." And about, you know, how that kind of tore apart the family by not being prepared.
Yeah, that's a good story. Good in the sense that it helps someone to think, right? Not good that it happened, of course, but good that it's an example of how bad it can get. Any other stories you guys tell? Yes.
My dad died unexpectedly 9 years ago.
Sorry.
Of all things, his gallbladder erupted, and that's what killed him. But he didn't have life insurance, and thank God he had 6 kids, and we got to split that bill. So that's kind of the story I tell.
What type of feedback do you get when you share that, if you don't mind me asking?
Most people are always, they do always apologize, but then they're like, maybe I should look at life insurance.
Great example. Great example. Thank you for sharing that.
I have two that I tell. One
Yes.
is, my dad died when I was 5 years of age, and he only had a burial policy to where he went to the funeral home and basically prepaid for a funeral. And so we didn't have to worry about that, but there was no monies, for my mom, and there was 4 children, and which obviously we were pretty poor, and because of that, and so I tell that story a little bit. But then the one I really tell, my sister, I sold her some life insurance about 11 months before she was killed by a drunk driver, and she had 2 small children, a 3-year-old and 2-year-old.
Oh boy!
And they were in the back seat. They survived. The 2 children did, and I had just sold her a life insurance policy 11 months prior to her being killed by a drunk driver, and just the impact that money had on her children, to where her children, they had a dad still, but they were 2 household income like most families are.
Yep.
And just they got to stay in their home. Their college was paid for, things of that nature. Just made life a little easier.
Yeah.
And but I'll tell you what, you can sell a lot more life insurance if you truly believe in life insurance. And we won't ask people to raise their hands and things of that nature, but to be honest, you should be your own first customer. And I won't tell you how much life insurance I have, but I have a lot of life insurance. A lot of life insurance. And I'm a true believer in it. And I can tell you story after story. I've been doing this for 32 years. I can tell you a lot of stories. But those are 2 just that were personal to me. But if you truly believe in life insurance and you're your own best customer, you have no problem selling life insurance.
Agreed. And thank you, Brian, for sharing those stories too. I really appreciate that. I would absolutely agree that I was my first customer. I wrote that policy on myself, and it helped me in a lot of ways. I started to understand the need for life insurance, but I also went through the process. Then I'm like, so when I was sitting with a client, I could say, they're going to do a paramed exam. This is what you can expect. When I did mine, it only took 10 minutes. They were out of here quick. That kind of thing where I could relate very easily to what they were about to experience. That has a lot of power. So yeah, if you're not an owner of life insurance, and I'm tempted to ask for raising of hands, but I won't do it. You should. You should own it, because if you don't own it, it's much, much harder to sell it and believe in it. It truly is. And it's much harder to articulate the story of the underwriting process or how you went about getting life insurance when you don't have it. So I would give that serious consideration if you're on the fence. Yes?
What story do you think has the most impact, the good or the bad?
Say that again, please.
I said, which one do you think has the most impact? The good one where obviously someone passed away and they got life insurance because they had life insurance, or they passed away and didn't have life insurance? Which one do you think resonates?
That's a great question. I'm going to put this to the panel. You guys are on the panel. What do you guys think? That's a great question. The happy outcome or the sad outcome, essentially. What do you guys think?
I think it's both.
Both?
Me too.
Depends on the person.
Depends on the person? Yeah. So tailored to your audience? Okay.
Have you ever heard of the crystal ball question?
If I could look into a crystal ball.
If you could look at a crystal ball 20 years from now and you saw your family with life insurance and I had passed away, or your husband had passed away, the difference in your life that would make.
Ah.
Or you look in the crystal ball 20 years from now and you didn't make this decision to do that, how would it affect your family and what difference? And you let them answer the question.
Okay, cool. I like it. I like it. Any other thoughts on that? And I'll weigh in with my opinion. Both. That'd be my answer. The devastating one packs a lot of power for sure. And the happy ending can too. It's like oh, thank goodness there was some protection. I can do that. I can protect my family like that. So I think both work. Tailoring it to your audience is where you're gonna finesse that. Great question. Someone had a hand up. Yes.
So would you tell both in a situation? Would you, if you were to tell both, would you start with the good one or would you start with the bad outcome?
I think that goes to audience again. I think so. You're going to make that decision game time.
Okay.
You know, when you're on the line ready to take the snap, you're going to decide which one's going to work or which is more powerful.
I think if you're getting pushback where they're acting like, well, you know, I think I'm gonna need to think about this, maybe a story where it's a bad scenario,
Mhm.
might pull them back from that.
Good thought.
Stepping away.
Good thought. I'm going to have to think about it. Have you ever heard that before? I never heard that in my years as a, no, I never heard. I got to think about, what do you have to think about? No, I'm kidding. That's a great point. It might pull them back in and you might connect emotionally. That's what your objective is. If you're connecting on an emotional level, you're more likely to get action today rather than someday.
And most people have their own story.
Sure they do.
Everybody in this room in some way, somehow, has been affected by a death, whether the person had life insurance or didn't. We've all given, you know, on the GoFundMe scenario, you know, paying for a funeral. We've all been in those situations where family. I got a phone call yesterday, and a friend of mine, her husband, which is less than 40 years of age, high 30s, passed away yesterday due to COVID.
Oh.
And in his late 30s. And you know, it happens.
Yeah.
And everybody has a story.
Yep, absolutely. Yeah, and if you can get a client to tell you theirs too, and you're connecting in that way, is that a good thing?
Yes.
Yeah, yeah. I know you better now than when I came into this room. That's important.
It can be hard, you know.
Very hard.
When you're starting out to have stories.
Yeah.
You know, I think I've borrowed a lot of stories.
There's nothing wrong with that.
You know,
Use them.
You know.
To piggyback on what you're saying too, and I think I know where you're going, if you don't have any stories, lifehappens.org, which is where that video, there's a bunch of stories on there. I mean, really good stories. When I say good, I don't mean happy-go-lucky. I mean good in the use of your job. So lifehappens.org, there's that video. There's a bunch of other ones that are really good, and they articulate very well. Some are business planning cases where they continue the business and they managed to stay out of poverty because they had that life insurance policy in place. Or it's like Mike and Tracy, they had some protection there. Now the kids are going to be okay. But a lot of good stories there. If you need a story, that's a good place to go.
But telling it yourself is better than just having them listen to it.
Or, I'm glad I didn't set this up. She just asked that question. Could you show that video with a client?
Yes.
What do you think? Yeah? Camille says yes?
I think you could, but I think coming from you and your heart might affect them more than just.
Okay.
Tracy said one thing on that video about how it gave time for her and the kids to adjust.
Yeah,
and
heal.
To make, so that was that's a powerful statement.
Yeah.
So it's like either using that video or even referencing something of that sort.
Yeah, great point. I think depending on who you are and how you like to present, you could sit down and show a video. Here's an example of one of the reasons I got in the business. Listen to this Mike and Tracy. They're just like me. Play. What'd you think about that? Oh my God, that was terrible. What a horrible story. Get out of my house. No, they won't say that. But that could be a way to go with the discussion on it. If you're not comfortable maybe relaying the story, I saw a video on Mike and Tracy. They were a young family. You could show them the video. Some guys I know have done that and like doing it that way. It's your style, fit it to how you like to sell, how you like to work with people, but it is an option, I think. Great, great point.
I got one question.
Yes, sir.
Not really a question, but something that I've always had on that. Sometimes I think on storytelling, we don't always have to tell the story of someone dying. Because obviously, we mess with a lot of younger people too. And one big thing I do use a story behind it, but is insurability for later on in life. As I had a 28-year-old married, 4 kids, not get life insurance, and then became disabled and died at 33. But it was an insurability. I could not write him after he. So that's a story as well.
Yeah, absolutely, and that's a good one to share too. I think that's going to connect with me emotionally on an emotional level. Certainly, another one top of mind when my mom got older and got Alzheimer's. She had to go into a 24/7 care facility for memory, and she had no long-term care coverage. Now, her decision was to self-insure. So when I was sitting down with people talking about long-term care planning and discussing it, I told them about my mom. And my mom did not have any long-term care coverage, went into a 24/7 care facility, went through $500,000 in less than 3 years. All that money that was supposed to go to the grandkids didn't. So all she left them was alone, right? No planning on long-term care. My mom did not have anything on there. She was going to self-insure. My dad had left her enough money. She was going to be okay. And that's what happened. So when I was in the conversations about long-term care, I tell them about my mom. It's not a pleasant story to reflect upon, certainly, but it is an emotionally connecting story because it happened to me and we watched it, my brothers and I, as we were trying to manage the situation. You really start to understand how expensive long-term care is when you're living it. It's unbelievably expensive. So I shared that many times with long-term care clients. And I said, you can definitely self-insure. That's an option. No action is your action on there, but let me tell you about what happened to my mom and the money she wanted to leave to the grandkids that didn't get there. With their hand up. Yes.
So, I write a lot of young, like Ty was saying, I'm only 2 months into it, so right now I'm talking to people I know and who they know and friends of friends. And
Sure.
So I kind of create stories for them because before I got into this business, I didn't know what the hell life insurance was. I was like, I think I've got that through work. I don't know. I signed up when I did my W-2.
Right.
They don't know that sometimes it's $50,000 or it's a group policy that's not going to go with them. So I create the story. Hey, you get married, man. Like, what's your wife going to do if something were to happen? Or what's your husband going to do? Like, you guys are buying a house. You guys have this car. You guys share the debt. What? So I create that story sometimes and have them look at, I didn't know about that. That's what it covers. So
Yep.
I create some stories sometimes. Just because I work with such a young, clientele right now.
30 life policies in 2 months.
Nice. So I was just like you, right? That's outstanding. So what you're saying is I was just like you, other young people that I'm working with. I was like you. I didn't know what the life insurance was, how much I had, and you're relaying that story, right? Cool.
I wish I had someone telling me.
That's powerful.
How do you get
That's powerful.
importance to them, like the younger group of people that understand the importance of being 19, 20, 21 and being healthy and getting it?
See, that's what I've had to overcome because a lot of them are 19, 20, 21. And honestly, I didn't understand the importance until I had a family, but I have to show them, since they don't have a family, how important it is. And I stress, I'm like, I wish at 19, when you're young and dumb, You're out there going to bars, you're out there doing whatever else you're doing. Like, that is so, you think you're the healthiest person in the world and nothing's gonna happen to you, but then again, a car accident, someone hits you in the intersection, something happens, and you're just like, okay, right, well, I don't have anybody, I'm not married. Okay, so you're gonna put that on your family? You know?
Yeah.
So your parents are gonna pay, a funeral's expensive, and then they've gotta go through, so I just stress how important it is, and I'm behind it, I believe in it, so I think that helps too, they can hear that.
Excellent.
You know, if
Yep.
you don't believe it and you're trying to tell somebody how important it is, if you don't even have it, you're trying to tell somebody
Right.
how important it is, it's not gonna work.
Great point. That's a great story. This is how I was just like you story, and that's a powerful story to tell. And that's not a tragedy. It's a reality. Hey, I didn't know. Now I know. I feel so much better. I've taken steps in building my financial pyramid, or whatever you want to go back to. That's a great one. That's a great story.
Long-term care, what is your response to somebody saying, I'm never going to end up in a nursing home?
Oh, God, I did that in Vegas once. I'll tell you that story later. Say that again?
I said long-term care, you know, what's your response to people saying, I'm never going to end up in a nursing home?
There's a couple different ways you can go at this, and by you not taking action, you're deciding to take action by self-insuring. So if you're comfortable with that and you've got the assets, that's where you are. So many people will take action by taking no action. That's their decision. And I get them to walk through that a little bit. What does that look like? People say, oh, I'm just going to go out behind the barn and no, you're not. No, you're not. That's not a good plan. That's really not a good plan. So let's start looking at the reality of it is, how is this going to affect your family? And turn it to that. Because many times in a conversation like that, you are an advocate for the beneficiary. Not necessarily the client or the insured, but you're an advocate for the beneficiary who's not in the room, who cannot speak for themselves. That's who you're advocating for. Is this what you want to happen to Mary?
I feel that's the same with life insurance.
Yeah.
Too. You're an advocate for the living, not the dead.
Absolutely. If you spin it in that way or help them to see it that way, it can make a big difference. And in that scenario, that might be where I would go. Great question. Yes.
I think young people, you know, from what I've seen, I mean, you know, 19 to like 30, you know, they want life insurance, but they don't like the way that they've seen their parents go through it.
Mhm.
They've seen their parents have term policies. Their advisor never followed up on them, never did any conversions, and it goes away. I've had a lot more people, especially in the African American market and minority small business market, where it's like, you know, I know that this can be a good thing. You know, cash value life insurance can be a great tool, but nobody's ever educated me on this. And so, yeah, I'm seeing a lot more, that trend right now, a lot more people wanting more permanent products. That they're not really into the whole, I might use it, you know, I might not.
Great point. I think that is, that hits on another really important point, which is, are we educators?
Yes.
Yeah, you bet we are. We are educating, and many times a client who knows nothing about life insurance, which would be 80% of the meetings you go on, they don't know anything about life insurance or most of the financial products. Would that be a fair statement?
Yeah.
Okay. Education is part of what we do. If you're educating people and you're teaching them and you're helping them to learn, you're making a difference. You're bringing value, as Israel said. He's realizing the importance of that now. It's a value add, big time. You understand something now that you didn't before. I almost tripped on that, but I didn't. I'll tell you the Vegas story later. You had a comment.
Yeah, as far as the education goes, Brian and I, Ty and the people in our offices, we don't consider ourselves salesmen at all. And we'll tell our clients, we're educators.
Nice.
We're gonna educate you on whatever we're talking about today, and we'll help you make the decision. But 9 times out of 10, we don't even ask for the sale. It happens because we've done our job educating them.
Love it.
Yeah.
Well said.
One important
Brian?
thing, and this is a great point of what you brought out, is when you find out a person has an existing life insurance policy, especially if it's a permanent policy, make sure you get that in-force illustration. That is so important. And the reason it's so important, not only for the 1035 to see what the money's, cash surrender rate, for a couple of reasons. Number one is to make sure that policy is going to last as it intended what the person thought they purchased, years ago.
Right.
If they bought a universal life and that company projected the interest rate at 6.5%, and now the interest rate's down to 4%, it's probably not gonna project like, and there's so many people that get surprised because they thought it was going to age 100, now it's going to age 80. And so you can do something about it now, possibly. You can fix the problems, and sometimes it's just, hey, Mr. Prospect, you need to keep the existing policy you have, you need to increase your premium from $100 a month to $150 to get back to where you originally thought it was gonna be. But also, so you wanna do that there's so many people out there that have life insurance, they don't even really realize what they've got.
Yeah.
They think they have one thing. I can tell you story after story after story. People thought they had something that's gonna last till a certain age, and they just don't.
Yeah.
And they don't have it. And then another question about the long-term care. Every person I meet with asks about long-term care. Do you have long-term care? It's the number one reason people have to spend down on Medicaid. It is the number one reason.
Yeah.
And what I always ask them is, if they say no, and most people do say no, I'll ask them, do you have any lazy money? And they'll say, what's lazy money?
Mm-hmm.
Money that you have set aside that you have no intentions for that money. You're not gonna build a house next week with it. You're not going to, it's not set aside, it's not earmarked for any particular thing. It's just earmarked to grow, and you can take that lazy money and you can, and there's some tremendous, and I hope we discuss it later on. I don't know what else in your presentation, I hope it is. Life with long-term care hybrids, is it in there?
I do not have it specifically in there, but we can go there.
Okay, I would love to go there.
We can go there.
Because that life with long-term care hybrid, with One America, Nationwide, and some other carriers, those are some tremendous products.
Yeah.
I mean, tremendous products. And those products are to where you can take a lump sum. I had a client, and to where she has, I don't remember the exact numbers, let's just say $100,000. And just did this one a couple of months ago. And I asked her, she said, I don't have any reason for that money whatsoever. And I said, well, let me ask you this, would you be willing to take that money and put it into a life with a long-term care product? And I said, here's the deal. You're gonna get very little interest on that money, because these products don't pay much interest. I said, but if something happens, your long-term care is taken care of. If something doesn't happen, your family gets all that money back. You've not lost a penny.
Yeah.
And she says, why would I not do this? That was her exact words. And I said, I can't think of a reason. And it makes all the sense in the world.
You bet.
I mean, these are tremendously great products.
Yep.
Those life and long-term care hybrids, and then you got the life and long-term care riders. There's some ridiculously great products out there nowadays that will take care of that long-term care portion of it.
You bet. That's a great point, and we will talk a little bit on some product stuff too. I lost my train of thought. Oh, top of mind, that is what people are most concerned about. It's long-term care. It is top of mind with almost every American. I think the surveys on this from LIMR the last 5-6 years, it's what's your number one financial concern is long-term care. And they may not be buying a standalone long-term care, but you might be working that in, as Brian alluded to, into a life product. And it's really easy to do that now because it is dynamite on how they've come up with this. The insurance industry, congratulations to them, and incorporating that into a life insurance conversation. So it is really, really cool stuff. We're right up against the break. Before I let you go, do you want to hear the Vegas story?
Yes.
Okay. It's not sad or anything like that. So it's a doofus story. So here I was in Vegas with a room twice the size of this, giving a presentation on a PowerPoint with a bunch of people just like you. And there was a power cord right in front, just like this. And guess what happened? I tripped because I move around too much. And I knocked out the power completely in the room. The room went dark. Thank you for asking that. I managed to survive. But it was one of those stays in Vegas stories, and you can't tell anybody this. Don't take notes on that. But it was a classic, as I allude to being an agent and asking things and they can't eat you is the answer. And I survived. We had a good time with it. We laughed about it. One of the guys, God bless him, came up from the front row and was a tech guy and fixed it in like 10 minutes. It was amazing, but it was just one of those things that happened. So that's another story. I've never told that one before. So you guys got me going a little bit. So we are right up on the break. take 10 minutes, stretch, have some water, be back here in 10 minutes, please. Thank you. Great morning session.